What is the government doing? I feel that the government is sticking their hands in where they shouldn't, and they're starting to control and dictate the market. Why can't the government keep their hands off the market and let nature take its toll? If that happened, I believe home prices would come down. I believe the government just stood out of the way. We would see lower prices and we would see lower payments. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to simplify home ownership. If it's your first time tuning in, do me a huge favor. Hit that subscribe or notification button so you are notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube at 8 p.m. and we post our content daily on Instagram and TikTok. So if you're not following us on our other platforms, please go ahead and do so. That's where we post a lot of our tips. Also, if today's video brings you any value, please tag a family member on it that you know is going to buy a home, and please like this video. All right, guys, we are going to get into, of course, the first quarter of 2023 is over. Okay, everyone was waiting for the end of first quarter. That's when we'll see more inventory. Christmas is over, right? Everyone say as soon as Christmas is over, we'll see more inventory. As soon as the sun comes up and we spring backwards, right? We spring backward, we will see more inventory. Of course, the first quarter over, and let's see where we're at. Do we have more inventory? Are prices skyrocketing or are they crashing right now? Are they coming down? Okay, that's what we're gonna go over today. But first, I want to answer a couple questions that a lot of people have had in the last couple weeks. Of course, I've given those answers in my Reels and my TikToks, but if you missed out, tonight we're going to go over it again. That's why you need to get on my Reels and my TikTok. But actually, if you are following me and you're not on YouTube right now, please follow me on YouTube. You go to youtube.com/what's-a-mortgage, all right? So, the question that everybody was asking for the last couple weeks, is FHA releasing a 40-year loan? Of course, we saw it on Yahoo and on ABC Arizona. There's one mortgage broker who actually lives in my area. He lives in Tustin, but I'm not here to shade him. Of course, both of these news outlets went off of what he said. He said there is a 40-year FHA loan to buy homes. Homes would get more affordable. I was like, there's no way in hell this should happen. Okay. Other lenders, other social media people, they put up that video as well. Get ready for the 40-year fixed loan. It will make payments more affordable. If you don't know, if you take a 30-year loan and you stretch it over 40 years, you pay more interest, but your payment goes down. Of course, a lot of people are against that because you'll be in that 40-year loan forever, right? For 40 years. And no one wants to be in a loan for 40 years. Most people who get 40-year fixes or ARM loans, they plan on staying in those loans for 2 to 3 years, by the way, okay? So definitely when this thing hit the streets, people are like, oh my gosh, you're just saying that because you're hating. I wasn't hating. Here is the mortgagee letter I want you guys to hear. Okay? So FHA, when they release a new law or rule, there's something called a mortgagee letter. It's like a love letter they write, right? Like, yeah, March 8th, 2023. That means it's recent, okay? This letter here, so this mortgagee letter established the 40-year standalone modification into FHA COVID-19 loss mitigation policy. So, if you have an FHA loan, currently have one, and due to COVID-19, which ended already, but some people are still suffering from COVID-19, you can apply for a loan modification. You can stretch out the years of your loan to reduce the payment. So if you bought your home last year when rates were higher, here's your opportunity to save a couple $100 a month starting May 8th. So this is for loan modifications only. So if you own a home with an FHA loan, you can reduce your payment as long as you have not missed any mortgage payment. And here's my pros and cons about that. My pro is you get a reduced payment while homes go up in value. So you're paying less than the minimum, but it's not a negative amortization. That means you don't owe more than what your balance is. So back before the crash in '08, there was these loans called these negative amortization loan. When you made a mortgage payment, if you made below the interest payment, you would owe less, you would owe more the following month. Your balance actually goes up. With the 40-year loan, your balance does not go up. You pay just more interest, less principal, but you pay a lower payment. So this program, okay, will help people reduce their payment. That's the good thing. Here's the bad thing. When people can't make their mortgage payments, oh yeah, so go back to so as they're making lower payments, their home goes up in equity if homes appreciate, which we'll go over second. But if their home doesn't go up in equity, they stay there and make a payment less than today's mortgage payment and rent. So that's a good thing. But here's the bad thing. And this is why I don't agree with the government sticking their hands in. Call me a bad guy or not, I don't know, okay? Yes, some people should have this privilege if they're in that bad of a situation. So if you can't make your mortgage payment, typically you have to sell your home. So nature take its course, right? It's called the circle of life. When people can't make their mortgage payment, they sell their house. When they sell their house, more inventory hits the streets. And if more inventory hits the streets, guess what? Prices come down. But the government is sticking their hand and they're fisting in, right? They're sticking their hands in and they're meddling with all of this. So here's one incident where the government stepped in and not allow homes to hit the market. By the way, if you have an FHA loan, you have 12 months mortgage forbearance as well. That means if you can't make your mortgage payment because of a loss of job, injury, or health issues, as long as you call right? Hawk, right? Every major city, I think there's you can look up the Hawk cities, right? Or areas where there's Hawk. You can look up and you can report that you have issues and they will allow you to skip your payments for 12 months. So on top of lowering your payment and you can't make it anymore, you can ask for forbearance for 12 months. So these homes are not hitting the market. So here's one instance, like I said, the government stepping in and then not allowing nature to take its toll. Let me know in the comments below. How do you feel about that? It's kind of like someone is done with the ride and your turn is next, but they don't have to get off the ride. But it does suck because if people who do have an FHA loan, if they did lose their job, right, should they be able to get this forbearance or not? Or they should be able to get the forbearance, but now they have a lower payment with the forbearance while their home goes up in equity. Imagine 2020, when people lost their jobs, they should have sold their house. That would have brought homes into the market. But the government stepped in, low rates, people didn't make payments for 18 months, allowed them to get back on their feet so they didn't have to sell their home. And guess what? They built up all this equity. So when the government does this, we're just gaining more equity and they don't have to sell. So that's one incident where the government stuck their hands in. Why is the government doing that? To bring more inventory? They need to bring more inventory. Okay. Now the second news that came out. So that's FHA loan.
Before you go to the second news, tell the IG to go to YouTube.
Yeah.
Shut up.
Oh, guys, if you're on IG, if you want to know more and see these articles, go to youtube.com/what's a mortgage. youtube.com/what's a mortgage. If you have questions, go to youtube.com/what's more and ask your questions. Yeah.
Any questions on Instagram will not be answered.
Any question on Instagram will not be answered. So I see that question right there about the dream. Ask it on YouTube, okay? We're answering all questions on YouTube only. So now let's go to the what?
In about 5 minutes, we're trying off.
In about 5 minutes, we're cutting out the Instagram. So go to youtube.com/what's a mortgage. All right, guys? So the second article. So after the second article, we'll cut it off. The second article. So let's say you don't have an FHA loan. You have a conventional loan. So FHFA just released, starting March 29th. If you are suffering from financial difficulties because of COVID-19, which ended 2 years ago, you could ask for a 6-month mortgage forbearance. So you can ride this thing to the end of holidays if you want, if you do it right, right? So as long as you haven't missed your payment and you've lost your job, you have financial hardship for 6 months, and whatever you don't pay, it's added to the back of the loan. So again, they gave an 18-month forbearance. Now they're going to tack on another 6 months. So people who typically are in financial issues will sell their home. And imagine if you got a 2 or 3% and you can't make that payment right now. I would not give that up. Of course, if there's a forbearance, if I was in their position, if there's a forbearance or mod, I'm going to keep that loan. Heck no, I'm going to let that thing go, right? 67% of homes in America with mortgages have interest rates under 4%. 67, 68%. And 97, 98% have rates lower than today's rates. So they're not going anywhere. So here's another incident where the government stepped in and not allow these homes to be sold. Keep an inventory out of the market. So that's when people say, oh, I can't wait. Oh, it's coming. It's coming. How can it come if the government is bailing out FHA homeowners and conventional homeowners? Okay. I'm not saying that I'm for, but like, I'm just saying for the people who are claiming the crash, how can there be a crash if there's no inventory? How can there be inventory if the government is holding it back and allowing all these programs so people aren't going to have to be forced to sell? If I'm in a financial crunch, I'm not trying to move and sell. Right? If I move and sell, I'm gonna have to pay to move. It costs money to move. So here's 2 incidents, right? So that's FHA, that's conventional. That happened in the month of March. So, don't expect to see anything right now. And then now let's look at Black Knight. All right, guys. So Instagram family, go to youtube.com/what's a mortgage. Okay. I will talk to you soon, guys. Have a great night on just Instagram. Okay. Instagram. All right, guys. Later. Okay. So my Facebook and YouTube family, how you guys doing today? Okay. So now let's look at mortgage delinquencies. For those who've been creeping in your ear, your aunt, your grandma, your Uncle Nino, oh, they're going to be a bunch of foreclosures coming. So everyone's predicting there will be job losses because as they keep juicing up in the Fed rate, right, people will lose their job. We're at about, 3.6% unemployment. They're going to try to get this thing to 5%. And that's 2 million jobs in America. So out of the 2 million people, they can either, if they have a low payment, they got to live somewhere. They have unemployment they can live off of. Now they're not forced to sell. Let's talk about people who already are. Oh, there's tons of people missing mortgage payments. You guys just don't know about the banks are holding it back. Okay, let's look at Black Knight here. So let's blow this thing up. Total U.S. delinquencies. Okay, you can look at this on Black Knight's report. Let's look at this bad boy here. Total U.S. delinquencies, loans 30 days or more, 30 days or more days past due, but not in foreclosure. 3.45% of people missing mortgage payments. So where are these foreclosures? Because if they're missing payments, it's on Black Knight's report. Because Black Knight sells foreclosure data. Also, if you are a real estate investor, buy Experian data. When people start missing mortgage payments, you want to get to them first. They miss 1 or 2 payments, you got to get to them. But 3.4%, slide it back, 3.4%, right? It's down 12% from last year, year over year. Up 1.9, but down 12%. Total U.S. foreclosure pre-sales inventory is up 0.46, not even 1%. So how can the skies open and a flood of foreclosures hit the market? And U.S. pre-foreclosures, 0.46. Total U.S. foreclosure starts, 29,000. The hedge funds can buy them up like that. By the way, we're going to talk about hedge fund money in a second. Total U.S. foreclosure sales, 7,100. Where is all this coming from, guys? Where's the foreclosure? So if you were sitting on the sideline, all this stuff, you're nervous, like, oh, prices are going to come down. I would love, trust me, I have more buyers who can buy a home at 500,000. If you're telling me you would unload 1,000 homes in Orange County at 600,000, I will fill up 1,000. That's just me, one loan officer. So trust me, I want prices to come home more than anything. And I'm on the inside, low key, I want prices to come down, honestly, because I'm updating the same pre-approval every day. You see these fingers? I can't type forever. You see these jacked up fingers? I'm here trying to type. Update a pre-approval letter, an extra 10 grand, 20 grand. I need price to come down too. I need more inventory. It's just not happening. Okay. So we don't see it. You have an FHA loan, conventional loan, you can't make mortgage payment, you got forbearance, and you got mods. And if you're waiting for foreclosures, they're not coming. Okay. New construction. Now let's look at new construction here. So new construction is actually up. The one thing they're not showing, so new construction's up, right? 640,000 active listings. That's typically about 8 months worth of supply. If they were all built, all those homes aren't built right now. Out of 640,000 active new construction, about 75 to 80,000 are ready to be moved in. 75, you can see that on the Fred report, by the way. 75 to 80,000 out of 640,000, a little bit over 10% is ready to buy and move in. Outside of that, there's not that much new construction. Okay? They're not getting new permits either because rates are high. It would be, suicide for them to finish these houses until rates come down. They need rates to come down because they can't bring prices down because labor is not going down. Would you take a pay cut? Most people who work in construction, they're not taking pay cuts. Also, from what I heard on the street, talking to a lot of builders, they're not going to release a lot of homes. If they flood the market of homes, guess what would happen to home prices? So they are going to keep a lot of that back and release it slowly just to keep demand strong. I'm just saying, okay? Banks aren't here, builders aren't here to take a loss. Now let's look at Redfin, okay? That's a report I read today. So buyers can't buy because sellers don't want to sell. Sellers don't want to sell because there's nothing to buy. Active listings are down 25% this time last year. So we have less and less active listings, okay? New construction is down, active listings down. So we're not seeing the activity we need for a declining market. And I'm telling you right now, I want prices to come down. And for me to see prices come down, we need more inventory. If we had more inventory, I could put more people in escrow. If you talk to any lender, any realtor, they don't care about I'd rather be wrong, but we need more active listings. If we have more active listings, I would put more people in escrow. Okay. Like I said, I'm updating the same pre-approval letter for the handful of people because there's not enough active listings. So now we see Redfin, active listings. Now, my favorite report, and no one really wants to log into this report with me because it tells you the truth, the Fred. Housing inventory, active listings. Okay, this is not pending sales. 80% of pending sales closes, right? These are active listings. Here we go. The downfall here. Look at this. April 2000, so right here, February, April is when rates went from in the 3s to the 4s and the 5s. So we got 5.25 at March 2022. And as rates climb, guess what happened? Inventory climbed as well, right? We got from 351,000 all the way to 750. The peak was in October 2022. Okay, that's when rates were like 6, 7, or 7%, getting close to 8. And then November. Here, November happened. November declined by 2,000. Oh, that's just freakish. It's just the holidays. Right? Oh, the holidays. We should need less. That's what a lot of people told me. Oh, we should see less homes because of active listings are going to go down. 2,000. That's when rates dropped back into the 6s. And boom, December. 748, 679, and climbing. Oh, it's just the holidays. Oh, when the new year is over, we're going to see inventory pick back up. 615, 577, 562. So the first quarter is over, and we don't have active listings. Why don't we have active listing, guys? People aren't forced to sell. As I mentioned over and over, and I'd rather be wrong so I can sell more homes, do more loans, right? I'm a capitalist, okay? 38% of homes in America don't have mortgages. 68% of homes with mortgages have interest rates under 4%. Would you upgrade with today's inflation? with a 6-7% rate, 97-98% of homes with mortgages have rates lower than today. Why would you upgrade with high inflation right now? We would need mortgage rates to come down to see more active listings. But if rates come down more, we're just bringing more buyers back into the market. The government is sticking their hands in where they don't belong, okay? They're stopping homes from forcing people to sell. One thing, they're keeping rates up, allowing builders not to build more homes. And they're keeping rates up. They're penting up demand. If they're going to keep rates up, work out a plan, okay? Work out a plan to provide tax breaks for builders so they can build more, force these builders to build more homes and sell it to people who are not investors, okay? Give tax breaks to people who own a home. Imagine if you have tons of equity. Did you know if you sold a home and upgrade and you have over 500 grand in equity, let's say you have an extra 300 grand, you sold, let's say you have 800 grand in equity. On that 300 grand, you would pay capital gains. And you know what our boy, I'm not blaming it on Joey B, but in Joey B's report, he's increasing capital gains. It hasn't passed yet. They're increasing more rules. If you're single, it's 250. They're not making it viable for people to upgrade. And with high rates, dude, give them a tax credit. Cut off 2%. Like if you are upgrading and selling your house, we're gonna knock your interest rate off by 2%. Do something, right? Those are low risk loans. People are upgrading with their equity. Tax breaks, cut lower rates. Do something to bring more inventory. Build more homes. Do something, but they're not. And in the month of February, if you go back to Black Knight, the reason why I like Black Knight, they sell foreclosure data. They're everything I'm against, and that's why I like them. I picked the one blog and company that sells foreclosure data. They make money getting more foreclosures out there, more inventory, more data. They sell data. That's all they do. And in the month of February, that's when we bottom out. Look at any news article. After January, our country bottom out. That means we hit our low at the end of January. February, we are picking up momentum. Not in all areas yet, but it's slowly trickling. Boom, 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 boom. And rates aren't even low yet. And then so we look at that. We go to CPI. CPI. If you look down here, it rose 5.6. We're in disinflation. Inflation's still going up, just at a slower pace. 5.6%. We don't have deflation. So you talk to any economist, they'll tell you, as inflation gets lower and lower, guess what's going to happen with mortgage rates? They're going to slowly come down. It's going to be hard to see rates come really low because of the new laws that Fannie Mae and Freddie Mac released, but rates are still going to come down. I don't think we're going to see 4s. I think we'll see 5s. Okay? 5.6% inflation. And every month, as inflation comes down, we are going to see lower mortgage rates. Of course, if inflation goes up, then it will take longer for rates to come down. But right now, rates are between 6.75 to 7 1/8 on conventional loans, 6%, 6.25 on FHA loans. And talk to anybody right now who's out there. Go out there and write offers yourself. If you are sitting on the sidelines and you don't believe me, which you have every right to, pick any home search. Go out and try to write an offer on a home. Remember, all real estate is local. But majority areas, like I said, we bottom out in February and it's picking up momentum. Of course, if you don't qualify, work on a game plan to make more money to outpace inflation and appreciation, right? My boy, the option swing, he follows me, right? I share stuff all the time. I'm like, that guy don't have to stress about buying a house right now. He's making hand over fist. So if you're in that position, what I say doesn't matter because your money should be outpacing inflation and appreciation. But if it's not, and you do qualify, you can verify all this information. But at the end of the day, the ball's in your court. And here is the dagger. Right? Blackstone announced $30.4 billion. It is confirmed money, not hopeful money, that they received in their fund. It's the largest real estate fund. And most of that money is for housing rental, okay, data center, lab offices, guys, and hospitals. So all this money is going to unleash the Kraken. And I said this months ago. Wall Street is raising $110 billion. Now that's $30 billion. $110 billion to buy single family rentals. All other assets already, they should make that shit illegal. I'm just letting you know. They should make that crap. I just said that's word, my bad. They should make that illegal, but they're not, because they don't want, all these guys are helping them stay in office. There's a fly right there. Woo, got that one. But they, it was like flying right by my nose. So now with rates coming down, lack of inventory, they need to build more homes. They got to keep these funds out of it, but they're not. They're not stopping these people, right? They expect in 2030, these hedge funds right now own 2% of the rental market. 2%. I think 2 to 3% of the housing market, of the rental market. They expect to own 40%. You can Google it. Wall Street raises $110 billion. Look it up, okay? 40% of the U.S. rental market by 2030. So in 7 years, if they own 3%, they got to come up with 37%. Where do you think they're going to get that from if we're not building new homes? Think about it. If they're not building a home, who are they going to buy it from? Right? It sucks. I would rather be wrong. Thank goodness I bought a home. I'm trying to buy my son a home just to make sure. But this is where we are in the housing market. And I'm telling you this because, not to say I told you so, because the last thing I want you to do, if you don't qualify to buy, I have other things that I'm going to do to show you guys what I'm doing to make money. I'm day trading. I don't want to talk about that too much, but I'm day trading. I'm making money. I'm refining my craft. Right? I'm about to hopefully get funded, get my funded account. That's another day, another story. But I'm sharing this with you so you can make arrangements to either buy, if you don't buy, move somewhere else, or find a way to make more money. Invest heavy into your business. If you're not going to buy a home, invest heavy into your business or heavy into yourself. Okay? Don't put $1,000 on 25 and let it ride out the roulette table. Don't do any of that. But this is the information you need so you can make the best decision for you and your family. So I provide this information so you're making a decision. Of course, if you're not in a position to buy, do not be mad at yourself. Know this information so you can do what's next. I realize I'm only 5'5". Right? If I realized that years ago, that I probably wouldn't try to be a professional basketball player and waste my parents' money on new Jordans every year. When I knew I wasn't going to grow past 5'5", right? 5'6" on a good day. But anywho, now that you know, you need to make the best decision for you and your family. All right? So that's all we have for you guys. Let's get some Q&A. Hopefully this information brings you value. You can look up all this information yourself. If you send me a DM, if I have time, I'll send you the articles. But let's go to the beginning. Let's go to the beginning again. Andy? All right, guys. If you want to get a hold of me, all right, go to the beginning.
Beginning?
Oh, yeah, so I can show all the slides again. So we can show where they get it from. 1 second, guys.
What were you asking for again?
All the slides so I can see, so I can tell them. So, oh, yeah, here we go. Yeah. So this side right here is from HUD. This is the mortgagee letter that will tell you the 40-year loan is only for loan modifications. HUD.gov, okay? The second one I got from FHFA, okay? Third one, Black Knight, the National Association of Home Builders, Redfin, the Fed, the Federal Reserve Economic Data, Black Knight again, CPI report, and Blackstone themselves. This is in their actual articles. Like, we are taking houses and we don't care. What can you do about it? All right, guys? So, guys, if you do want to get a hold of me and you want to go hit me in, I just want to see if I qualify. We do not need to do a hard credit pull. If you have a lender, call your lender. You have a realtor, call your realtor. But if you're like, you don't have anybody and you just want to chat with me, 714-790-9697. Give us a call. Send us a text message, all right? Guys, if I brought you value and you're not following me on YouTube, please hit that follow button, all right, guys? Also, follow me on Facebook, YouTube, Instagram, TikTok, and LinkedIn. What up, Ghost Tesla? Bring on Troy. What up, Rose? What up, Javier? What up, Laura? Hitalo? New construction? It all depends. Like, with new construction, it's kind of tricky. What I would do if I bought new construction, I would see. I would pick the bills I want and see what other people are offering, and if there's better deals, have the builder match it. If no one's giving deals, it tells you right there what type of market you're in. D money. If I pick a lender, number one, they got to be licensed. If you are going with a jumbo loan or an ARM, go to the bank. Call my boy Sal from US Bank. Okay. If you're going with a conventional FHA VA, I would go to a mortgage broker, lower pricing. If you're gonna go with down payment assistance, or you're gonna go with like condo condo approvals, go to the bank. Okay. If you're gonna go under 620 credit scores, go to the bank. All right. Hopefully that helps you out. Rose, you're definitely not a bad guy or a singer. Thank you so much, Rose. That's annoying. I'm with you. Is forbearance only for FHA? Yes, the forbearance, conventional has forbearance as well. I don't think it's 12 months. It might be 6 months. Be not. Thank you. What are Zillow's estimate monthly payment based on? Their payments is based on. It's hard with Zillow because they don't tell you the interest rate. Jazz Gam. If you read their fine detail, it'll tell you. A lot of times it doesn't include the tax insurance as well or the PMI. VA NICA, I don't know yet. They haven't released for VA, but for conventional, they got the 6 months. For FHA, they got the mortgage forbearance. Jazz Gam, if you have a scenario, send us a text message, okay? 714-790-9697. Dream Carlos Nunez. The Dream program for now will not be back. They are not coming out with more funds. Until people refinance out of their Dream loan, which probably won't happen for 12 to 24 months, that's when it'll happen. Whatever is used after people refinance out of it will go back in the kitty, okay? Rose, hey man, my aunt has a $2.9 million home, $500,000 mortgage, 3.75. Get her cash out, refi, or do a reverse mortgage. I would, depends how old she is, I'd probably take the reverse. No, I'd do a equity line of credit first. If you can, then do a reverse, okay? What up, Base Clothing? Thank you so much. I find you an awesome home outside of Orange County. Yeah, reach out to Brandon. That's not the other Brandon, but the Brandon. You know what I'm talking about, Brandon. Krista, what's your advice for first-time home buyers that can afford a house? Is it smart to wait or buy now? If you can qualify, all real estate is local. Krista, I don't know exactly where you're at. Look at local inventory. If inventory is sitting and there's giving price reductions and more inventory is hitting the market, then I probably wouldn't buy right now. But if you have a lack of inventory and there's no price cuts, I would buy. Remember, all real estate is local. If you have FHA loan in the future, unless you put 10% down or more, on the 11th year, it'll fall off. But if you don't put 10% down, you have to refinance out of it, okay? I want prices to go up and go to the moon. That makes it easier to pay off my mortgage. Central Coast has limited inventory. Yes. It's very informative. Thank you so much. Thank you so much. We see here. Facts. Yeah, I wish there was a position. What were the first two? The first article came from the HUD.gov, right? HUD.gov. Second one is FHFA.gov. They're both .gov. So I did is 3.gov. We got FHFA, HUD, and we got the Fred is .org. My bad. All right. I mean, my wife and I bought it home following your advice back in 2021, sitting on 2.75. What I want to know, how can I take the equity to renovate my property? Theron, you can get a line of credit. Don't touch that 2.75. Go get that equity line of credit, okay? What is recasting on a mortgage? So, Debbie, if you're like Theron and you had a low interest rate on a conventional loan only, if you chip away at the principal and then you do like a $25,000 like principal reduction, they'll recalculate the balance against your current low rate and they'll drop your payment, okay? You can do it twice in one loan. Hopefully that helps you out. So if rates don't pull back, you can just do the recasting. You only can do it on conventional loans, okay? Are you with a familiar company called Own Up? Are they good to use for a loan? D Money, send me the loan estimate. Send me a loan estimate. I think they are a broker. Everyone keeps telling us to use a local lender. I don't want to speak bad about another company, D Money. If they broker, most likely they're going to broker to United Wholesale or Rocket, which are the two big companies, and they have amazing service, okay? I would not talk smack about someone unless I knew the whole story. That's why I don't talk smack on my mother-in-law. I plan on putting 20% down, conventional loan, 6.5. That's a good deal. 6.5 right now. That's a good deal. They're probably going to Provident for that one. We live in San Diego. Oh, San Diego? I would not. Dude, you know, what's it called? Goldman Sachs says San Diego and San Francisco were going to crash. Try to write an offer right now in San Diego. It's multiple offers. San Francisco, slowly picking up momentum. I would buy sooner now than later. Do you want 40-year loans to come back? Yes, I would want 40-year loans to come back. It would make homes more affordable for people. You know, uh, I think it would help more people get a home, but I probably wouldn't. I would, if I knew 40-year loans dropped, I would move somewhere like Arizona, Nevada, and buy a home now. Right? In California, it would just drive up prices hard. In Orange County, it's hard to be to cash flow positive, Jazz, in OC or Riverside unless you have a big down payment. If you're chasing cash flow, you need a huge down payment. Okay. Lord, if all you can get is a condo, get a condo. Okay. DSCR loans are good loans for people who are going stated. Sophia, recasting is when they recalculate the balance against your current interest rate. So if you do a huge principal reduction, they'll recalculate the balance against that rate, your rate against that balance. Typically, when you get a loan, they use the original loan balance or loan balance. But when you recast, they'll recalculate against the current balance. I just closed on my home, but they lied about HOA amount, and it's actually more than what is listed on the paper I signed for. I'm so upset. I'm sorry, Mara. Call your agent. Krista, get a 2-1 buy down right now. I believe rates will pull back in 2 years. For seller to pay 6% concession, it would be really hard right now unless you pick an area where homes aren't moving. Okay. I have a condo. I love my condo. Right? If you're gonna buy and live in it, as long as you enjoy the property, that's all that matters. Your first home, typically not your forever. My first home was bigger, and I sold it right in like after 2 years. So your first home, it doesn't matter because you're gonna upgrade. You're gonna either upgrade or downsize one more time. I downsized, right? All right, guys, I really appreciate everyone who watched, liked, and comment. Please follow the page if you're not following us by now. And guys, we want to end all our episodes with our attitude is gratitude. Without you, there is no us. So thank you guys so much and have a great